Are you aware that some of the most successful investors today are cashing in on high-yield ETFs? But what makes these ETFs so special? Well, let's unravel this enigma together. High-yield ETFs, or exchange-traded funds, are investment funds traded on stock exchanges, much like individual stocks. They offer a unique blend of features that make them a compelling choice for many investors. Notably, they provide a high dividend yield, which can be an attractive income source, especially in a low-interest rate environment. In this video, we'll be exploring 5 high-yield ETFs that have caught the attention of savvy investors worldwide. These are SCHD, SDY, VOIM, SPIDE, and DIV. Each of these ETFs boasts a unique strategy and a diverse portfolio that could potentially add value to your investment journey. So, are you ready to delve into the world of high-yield ETFs? Let's dive deeper into these intriguing investment tools to discover their true potential. Hello viewers, if you are enjoying this content, and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us, and remember to comment and share. First on our list is the Schwab US Dividend Equity ETF, or SCHD. But what sets SCHD apart from the pack? SCHD is a unique player in the high-yield ETF market, offering a diversified portfolio that focuses on US stocks with a track record of paying high dividends. Notably, it prides itself on its disciplined approach. This ETF doesn't just offer high yields, it offers high yields from companies that have consistently paid dividends for at least the past 10 years. So if you're looking for stability in your investments, SCHD is worth considering. What's more, SCHD's performance has been impressive. Over the past 5 years, it has generated an average annual return of around 6%. That's a steady, robust return that's hard to ignore, especially in a volatile market. And remember, that's just the average. In some years, SCHD's return has been even higher. Now let's talk numbers. The annual yield percentage of SCHD is currently hovering around 3%. That might not seem like a lot, but remember, we're talking about a steady performer here. That 3% is a consistent return year in, year out. It's the kind of return that can really add up over time, particularly if you're planning to hold your investment for the long term. But the real beauty of SCHD lies in its strategy. It's not just chasing the highest yields, it's chasing the highest yields from the most reliable companies. It's a strategy that prioritizes long-term growth and stability over quick short-term gains. And it's a strategy that has paid off, with SCHD consistently outperforming many of its peers. So, if you're an investor looking for a high-yield ETF with a solid track record, a steady return, and a sensible, disciplined strategy, SCHD is worth a look. It's a solid foundation for any investment portfolio, offering a balance of high yield and stability that's hard to find in today's market. SCHD, a steady performer indeed, but what about the others? Let's find out. Next up, we have the SPDR S&P Dividend ETF, or SDY. What's the story behind this legacy ETF? This heavyweight in the ETF world has been around since November of 2005, making it one of the oldest dividend ETFs on the market. The SDY has been a staple for income-focused investors for nearly 2 decades, a true testament to its resilience and reliability. The SDY is unique in that it tracks the S&P High Yield Dividend Aristocrats Index, an elite group of companies that have consistently increased their dividends for at least 20 consecutive years. This is no small feat. It requires a company to have a robust business model that can weather economic downturns and still deliver growth. But what makes SDY a legacy ETF is not just its age or the prestigious index it follows, it's the performance. Over the years, SDY has proven to be a steady performer, delivering solid returns to its shareholders. As of now, its annual yield percentage stands at around 2.8%. That's a solid return, especially when you consider the stability that this ETF brings. The SDY's long-standing track record of consistent returns is a testament to its strategy of focusing on dividend aristocrats. It's a strategy that has proven to be successful time and time again, and it's one of the reasons why this ETF has been able to maintain its legacy status. But don't let the term legacy fool you. SDY is anything but outdated. It continues to adapt and evolve, always looking for ways to maximize returns for its investors. It's a forward-thinking ETF with a rich history, and that's a powerful combination. So, if you're looking for an ETF that has stood the test of time, has a strong performance history, and focuses on dividend aristocrats, SDY should definitely be on your radar. It's a legacy ETF that continues to deliver year after year. SDY, a legacy ETF with a strong track record, but there's more to explore. Last, but certainly not least, we have VYM, SPIDE, and DV. What makes these three ETFs stand out? Now let's dive into the nitty-gritty. Let's start with VYM, the Vanguard High Dividend Yield ETF. This fund covers a broad spectrum of stocks, focusing on companies with a record of strong dividends. It's a large-cap blend fund, meaning it includes a mix of growth and value stocks. It's a steady performer and it's got a long track record to prove it. What's more, the annual yield percentage is solid, hovering around the 3% mark. This makes VYM a safe harbor for investors looking to weather market storms and still receive a healthy income. Next up, we have SPIDE, the SPIDER Portfolio S&P 500 High Dividend ETF. This fund targets the top 80 high dividend yielding companies within the S&P 500. Its appeal lies in its simplicity. SPIDE gives investors a straightforward way to tap into the high dividend yield potential of the S&P 500, making it a strong choice for income-focused investors. The annual yield percentage is enticing too, averaging around 4%, which is considerably high in the current market. Finally, we have DIV, the Global X Super Dividend US ETF. This one is a bit different. Instead of focusing on large-cap stocks like VYM and SPIDE, DIV zeroes in on 50 of the highest dividend-yielding equity securities in the United States. It's a bit more of a wild card, but that's part of its charm. It offers a higher potential reward for those willing to take on a bit more risk. And the annual yield percentage? You'll be pleased to know it's a whopping 6%. So why are these three ETFs a good choice for investors? Well, they each have their unique strengths. VYM offers stability and a broad exposure to high dividend yielding stocks. SPIDE provides a simple and effective way to tap into the high yield potential of the S&P 500. And DV, while a bit more risky, offers the potential for a higher reward with its focus on the highest dividend yielding securities. But there's more to it than that. These three ETFs are not just individual players, they're part of a team. When combined in a portfolio, they can provide a balance of stability, simplicity, and potential high rewards. This makes them a strong choice for those looking to diversify their investment and generate a steady income, all while mitigating risk. And let's not forget the power of compound interest. Reinvesting the dividends from these ETFs can lead to significant growth over time. It's like a snowball rolling down a hill, getting bigger and bigger. This is the magic of high-yield ETFs. VYM, SPIDE, and DV, three unique ETFs with their own strengths. Together, they form a formidable trifecta for investors seeking high-yield opportunities in 2025. So don't just stand on the sidelines, it's time to get in the game. So, we've seen the power and potential of these high-yield ETFs, but what does this mean for you? Well, let's break it down. High-yield ETFs offer an attractive proposition to investors seeking consistent income streams. They provide a diversified portfolio of high-yield bonds, making them a safer bet compared to individual bonds. These ETFs like SCHD, SDY, VYM, SPIDE, and DEV that we've discussed, each with their unique annual yield percentage, can play a key role in maximizing your investment returns. They offer a blend of growth and income, making them a strong contender for any well-rounded investment portfolio. The beauty of these high-yield ETFs lies in their ability to weather economic downturns, thanks to their diversified holdings. They are designed to offer consistent returns, making them a reliable choice for those seeking stability in an uncertain market. Remember, the world of investments is vast and diverse. High-yield ETFs are just one piece of the puzzle. And that wraps up our journey into the world of high-yield ETFs. We've traversed the landscape of these investment powerhouses, delving into the nuances of SCDH, SDY, VYM, SPIDE, and DIV. Each in its own way offers a unique blend of stability and growth, providing investors with a reliable stream of income and potential for capital appreciation. Remember, diversification is the spice of life, and in the world of investing, it's the key to managing risk while maximizing returns. High-yield ETFs are just one of the many options available to you. Staying informed and understanding your options are crucial steps in your investment journey. If you found this video helpful, don't forget to subscribe, like, and share. We're always here, ready to guide you through the labyrinth of investing and finance. Until next time, keep investing wisely.